In this lecture, we are going to look at the budget. This is not going to be the only time in the course we talk about some of these issues, but this will lay the groundwork for later discussions. Let's start, well, let me back up. There's going to be something different about this lecture and lectures going forward. It has come to my attention that there are quite a few students who are just letting the video play out and then using artificial intelligence to answer the questions. So I'm going to be inserting into the lecture some attention checks. I will let you know when there is an attention check. There will be a thing for you to write down. I would keep a separate sheet of paper because these really aren't notes you're going to need. These are just simply my best guess at how I can discourage the practice of just letting the videos play out and then answering the questions with AI. So there may be some evolution to this as we go, but when I warn you of an attention check, you will need to write down the next thing or things that I say, and then you will use those to answer some attention check questions spaced throughout the Edpuzzle assignments these lectures become a part of. All right, now, back to the budget. So first, what is the budget? And here, there are going to be lots of terms that can be easy to get lost in them. So I will be underlining some of the key terms that would otherwise be easy to kind of lose in the shuffle. So the first thing to understand is that the budget is policy. And remember, when we talk about public policy, it's a broad thing. It is actions the government takes. And budget is most certainly action the government takes. The budget determines what the government is going to do and how much of that thing it is going to do based on the money that is set aside for it, and also where money comes from to do those things. How we choose to gather revenue to pay for things in this country is itself policy. So to recap that a bit, what will the government do? Tied up in here in terms of the where is the money going to come from, not just how is it going to be spent, but fiscal policy. And for this, it underlines a key term, and we are going to use a definition from the Congressional Research Service. And fiscal policy is the means by which the government adjusts its budget balance through spending and revenue changes to influence broader economic conditions. If that sounds like that's a ton of stuff that would fall under that umbrella, it is. Again, the budget is policy. What we're going to spend money on, where we're going to get the money for that spending, and how that is going to affect the economic conditions in the whole country. The budget is also a balance. Now, I'm not suggesting that the budget itself is balanced, especially in terms of revenues and spending, but it is, even if very imperfect, a balance of revenue, which is money that the government takes in largely through taxes. And we will look at different sources of revenue in a bit. Okay, and expenditure. Expenditure is the fancier word we use for spending. And as we're going to see, expenditure also is kind of a range of things that we will talk about. This is just to get us some of the basics under our belt before we move on. It's also an allocation, if we think about this in terms of the people and the economy, it's an allocation of burdens, right, which are taxes, largely taxes. There can be, again, as we look at other sources of revenue, we'll see that there are other things that the government uses to take in money, but also benefits. As when we think about this, you should not just think about it as dollars and cents. Money coming in, money going out. The money coming in is a burden on somebody. And there's a lot of politics around who those somebodies are going to be bearing the burden of revenue. It's also an allocation of benefits. Some people will benefit more or less depending on how the government chooses to allocate expenditures. And so all of these things think about them in terms of their real world, what has often become popular to say in politics, the Main Street effects of the allocation of burdens and benefits. The budget, for a long time, and much more so in your lifetime than in the earlier parts of mine, deficit is a big part of the budget. And deficit is the amount of expenditure the government makes that is not provided by revenue the government takes in. And that's the deficit. The difference, the negative difference between what the government spends in expenditure and what it takes in revenue, which leads directly to the next term, and that is debt. And for the government to make up the deficits between revenue and expenditure, the government has to borrow money, and the government borrows lots of money. And I'm not picking on the United States. Lots of rich world governments have been doing the same thing, especially since the pandemic. And so debt, borrowing to make up the deficit, has become a big part of budget. And before we move on from this, one of the things you kind of need to take into account is deficit and debt very much go together. Deficit we should think of as kind of the short term, the year to year, and even shorter time spans, the difference between what the government takes in and what it spends. Debt is the long-term accumulation of borrowing that the government has done. And so you can see this in the size of the national debt, which is also something we will talk more about later. As I said, we'd go into some more detail on these, but first we're going to do an attention check, things to write down, the Egypt, llama, and beach ball. If you write down those three things, you'll be set for the next attention check question. Again, revenue is money the government takes in from various sources. So we're going to look at these. We'll kind of take them as in their biggest slices. First category are personal taxes. There's a few things in here. So the most important, as you can see down here, is the progressive income tax. And what the progressive income tax means is the more money you make, the higher the percentage of your income that is taxed. It's not just that a person who makes more money pays more money. Even if everybody paid 10%, a person who makes $1 million is going to pay more in tax than somebody who makes $50,000. So be careful about this. It's not just that somebody pays more, they pay a greater percentage of their income in tax than somebody who makes less money. Now, initially, this was found to be unconstitutional in the case of Pollock versus Farmers Loan and Trust Company back in 1895. However, the progressive income tax is now constitutional because we changed the Constitution. In 1913, the 16th Amendment was passed, and the government was able, as a result of that, to tax income. Of course, it's constitutional because the amendment says so. And one way to help remember these, sometimes the numbers are useful. The age at which most people will think about getting their first job or get their first job is when they turn 16. So when you get your first job at 16, you have income and you get taxed on it. It's at least what helped me remember it when I was in high school learning this for the first time. And as you can see, that makes up more than half of the sources of federal revenue. There are also social insurance taxes. Now, these are tricky. These they're partly personal and partly not. And we'll explain that. And I think some of you are probably already aware of how this works if you have jobs. Social insurance taxes, FICA, is what you will see on pay stubs. and that is the Federal Insurance Contribution Act. And that goes to cover things like Social Security and Medicare, and so our benefits primarily for the elderly. I said it's partly personal, partly not. You pay some of it as an employee. Your employer also contributes a portion of your earnings into that same tax pool. And as you can see, that's the second largest source, the social insurance payroll tax, or FICA. Corporate income tax is a distant third. This is tax paid by companies on their profits. Tariffs are also in here. These you would kind of put in the other category, and this is from fiscal year 2022, so obviously there's been a change in U.S. tariff policy since 2022, and so the makeup of this may look different if you were looking at a more recent graph. But tariffs are, they can be taxes on imports or exports. We talked about this earlier with the discussion of the South being afraid that the government would impose taxes on exports of, when the Constitution was being written, the main export from the South to be concerned about was tobacco. And so the Constitution does not allow taxes on exports. So for us especially, tariffs are going to refer solely to taxes on goods and services imported into the United States. Smallest portion, excise taxes. These are often referred to as sin taxes, typically because they cover things like alcohol and tobacco, but it's not just that. Excise taxes apply to ammunition, fuel that people buy. So that's probably, fuel taxes as a form of excise tax are probably the biggest excise tax that the average American pays. And then there are these other sources, and I know I talked about tariffs being in there, and that's really because kind of that's how they would fit on this graph. But generally, other is going to be things like fees that the government charges for various things, royalties paid on mineral resources extracted from federal land. In terms of fees, one example that would work here would be licensing fees from the FCC for radio stations and television stations that broadcast over the air. And so variety of sources of fees also make up federal revenue. So I should have clicked ahead through those. Sorry about that. The other one, getting these somewhat out of order, but again, the order you write them down doesn't matter a whole lot. Estate or gift taxes. So estate tax policy, that is taxes paid on the wealth a person leaves behind and when they die. Gift taxes, those are taxes paid for any gift a person receives. I believe the cutoff is still $10,000. As you might imagine, nobody is throwing gifts of anything close to $10,000 at Dr. Brown on a regular basis. But those would be some of the things in the other category to go along with royalties and fees. As we look at this, one of the things to understand is we have these different categories, and I told you that there are shifts in these things over time. And this graph helps us understand that. And again, it cuts off in 2022 as well. I'm hoping to have some better graphs soon. Sometimes I choose these based on how they display the data, and this one I think is particularly good. So you can see the share of different things over time. So corporate income tax used to be a much greater, now be careful with these. These are slices. That does not mean corporate tax was 70%. You need to think about these like layers in a cake. The whole thing is the cake. These are the slices of it that they make up. So corporate tax used to be a larger layer in the cake of federal revenue. It has declined. Social insurance or payroll tax, it used to be smaller, it has grown. Excise tax also used to be a larger source of tax relative to the others, and it has shrunk. And this does not mean that dollar amounts for these things are necessarily shrinking, but how they fit in the overall picture and the overall proportions of federal revenue is what fluctuates over time. And this would be a good time for another attention check. So your first one, and you've got your three terms, I hope. The second one, let's see. The second one will be Indian Ocean, Philippines, and swordfish. As you can kind of tell, I'm just making these up on the fly. I also want you to understand how U.S. revenue compares to other countries. And not all of these are wealthy countries, but they tend to be the wealthier end of countries globally. And this white bar you see here, this is the OECD average. It's the Organization for Economic Cooperation and Development. It's referred to, like the Economist's standard description of this as a club of mostly rich countries is appropriate. So the average for the OECD is that revenue makes up 33.9% of a country's GDP, which is basically its gross domestic product. It's the size of their economy. And the U.S. is below that average at 25.2% of GDP, whereas your Scandinavian countries, Denmark, a much higher share of GDP, France, usually at the top end. And as we think about this international comparison, I mean, I don't want you to make too much of it, and numbers are not the whole story. I mean, depending on your political persuasion, you may think that this is a good thing for America. I'm not saying you're wrong. On the other hand, those of you who are more of a leftward persuasion might point out that Denmark frequently rates as one of the happiest countries in the world. Sometimes they've been the happiest country in the world. There are lots of variations across these countries. Italy takes in a lot of tax. There are a lot of Italians who do not benefit from government services from those revenues, and a lot of Italians Italy is not ranked as one of the happiest countries in the world. But I did want to give you some sense of international comparison. We're next going to look at expenditure. And this is how the government spends its money. And I'm just going to throw all these categories out here at once. We've got mandatory spending, which as you're looking at this graph, it could be a little kind of hard to make sense of at first, but the total outlays of the United States in 2024, that's the most recent data that I've got, especially that's displayed this way. Of that $6.8 trillion, 4.1 was mandatory spending. So that is the largest share of federal budget. And these are things that are also referred to as uncontrollable expenditures. They are things the government must pay. Social Security is something the government must pay by law to people who are eligible to receive it. Same with Medicare. Medicaid as well. Medicare based on age, Medicaid based on need. And there are some other income security programs. And then there is the other category, which is a lot of money. It includes a lot of different things. Closely related is net interest. And this is what the government has to pay simply in interest to do what's called service our debt. Our government has a huge debt, which means the American people have a huge debt. and just to pay the interest on this would be like kind of like making just the minimum payment on the credit card. And that cost in 2024 $881 billion. Now, you might think, well, don't we have to pay that? Isn't that mandatory? In the strictest terms, no. At the same time, if the U.S. were to not pay the interest on its debt and go into something called default, the effects of that would be catastrophic within the United States and globally. So net interest you should also think of as essentially something that the government has to pay. And then the third category, which is in the middle, it's much smaller than mandatory, but obviously about $1 trillion more than the net interest in 2024, is discretionary spending. This is what the government gets to choose how to spend. And within these, there's only two categories here. Obviously, there's a ton of programs. Non-defense spending, $960 billion. Not that far behind it is defense spending. And defense spending is going up. So this will look different for years after 2024. As we think about this, right, also, if you think back to that part of the bureaucracy lecture on iron triangles, the example of the F-35, we even need to be careful about considering just how discretionary spending really is. The defense budget, one part of the lesson from Iron Triangles and the video you watched about the F-35 and defense spending in general, is that in political terms, defense spending is also in many ways mandatory. It is very hard to cut, and therefore, this budget is not nearly as discretionary as some other things in the non-defense budget. So I know that I took a graph that was already kind of messy to look at and gave you three categories and just made a mess of all of that. And that can't be helped. Expenditure is just messy, and where there really truly are choices for the government to make is really a pretty narrow slice of that budget. Okay, our next topic is going to be trends in expenditure. And the general trend that you need to understand, the very big picture, is budgets have increased over time. And what I mean by budgets, because budget is revenue and expenditure, when we talk about the budget, in practical terms, what people mean most of the time is spending increases. But of course, spending increases also have to come with increases in money coming into the government, either through revenue or borrowing. So budgets have gotten bigger over time. Part of that is because of inflation. And I put an asterisk here because we need to be careful. Inflation is just a decline in the value of money, or a decline in the purchasing power of a given unit of money. For example, according to the Bureau of Labor Statistics, and this data is fresh at the time of the lecture, $1 in 1913 would be worth $33.07 in 2025. I believe that was through December of 2025. So what you used to be able to buy for $1 would now cost you $33.07. So budgets have to keep up with inflation and changes in the purchasing power of $1. At the same time, I put an asterisk here because the budget not only can reflect inflation, but large budgets, lots of borrowing, lots of spending, it can make inflation worse. That was certainly something that was seen for a variety of reasons, but some example of that previously would be spending during the 1960s by the United States government, especially as Johnson is trying to simultaneously roll out his Great Society social programs and pay for the expanding war in Vietnam. Or you could see it in the result not just of supply chain crunches, they were part of inflation after the pandemic, but also all of that money the government shoveled out the door in stimulus checks and other programs to prop up the economy. And when you put a lot of money in people's hands, especially when you put it in the hands of Americans, they are very likely to spend it. And when you have more people with dollars trying to buy stuff and the amount of stuff can't keep up, prices for that stuff will go up. It's times like this I really wish we had an econ class at the high school level. Other trends behind the increases in budgets, there's a variety. One is incrementalism. Okay, never underestimate incrementalism. And that is just the tendency for what is spent on various government programs to ratchet up over time. Just to spend a little bit more on them each year, and over time, I mean, that very much adds up. I mean, you can see in most of these things, the tendency, broadly speaking, has been for long-term increases. There are also some less mundane things like incrementalism. There is the national security state, which rose. I mean, this graph only covers from 1962 through 2016, so it's kind of limited. But the rise of the national security state after World War II, as the U.S. does not retreat from the global scene and is very much involved in guaranteeing the security of Europe and Japan and Korea, and waging a Cold War against the Soviet Union and its allies. And so that caused a tremendous increase in defense spending. And then, of course, you can't leave the military-industrial complex out of this. This was, again, something we talked about in our look at the bureaucracy and those iron triangles. I mean, this was something that Eisenhower, he gave a speech very much about the military-industrial complex and what that was going to mean for spending on defense, as the rise of the national security state is a huge part of the story of increases in budgets. The U.S. still spends far and away more on its military than any other country, including China. Also, social services, right? The building of the welfare state, things like Social Security, Medicare, Medicaid, and those have grown over time, and they are part of the story of budgetary increase. And sometimes when you hear talk about this is going to be guns versus butter, right? The guns versus butter debate. Should a government spend more on security, the guns, or butter, right? The welfare state or the social services state? In the United States, so far, the choice has been, we'll have both, please. And so far, the U.S. has been able to manage that, but that is a big part of the story of budgetary increases. To talk about some of the origins of these, the Social Security Act of 1935, coming out of the Great Depression, this was meant to initially just prevent old age poverty, and since then it has kind of morphed and become this more generous thing. And Medicare, right, of these was more recent. That's partly why this graph is not perfect. Social Security would start way back here, and Medicare starts here, right? So, I mean, there's nothing, and then all of a sudden it's there. It becomes this larger program. So Medicare beginning in 1965, and then, of course, many more. Right? Lots of these income security programs that the government is involved in. Okay. We will pick back up with this in the second lecture. We're running at about 30 minutes. Let's do our last attention check. I should have probably done more of these, but it is a new thing. Let's see, last attention check. Okay. Let's see, we'll have Ottawa. Don't worry about the spelling. You'll figure it out when you see it if you don't already know it. Orca and hibiscus. Also, don't worry about the spelling. You'll know it when you see it. All right, if you've been paying attention, those attention check questions should not be a problem for you.